Welcome to Frontier Opening Bell. It's Wednesday, the 15th of July. My panelist, Chinma Ukadike, who is a consumer goods analyst at Vetiba Capital, Ayode Jiebo, the CEO and chartered trader at Afrinvest Securities, and Alikan Sacho, CEO and founder at Rich Frontiers Management in Nairobi. Thank you, everyone, for coming on the show. Let's get the show started. Of course, it was a very negative Tuesday for many of the African exchanges, from Kenya to Nigeria to Egypt to South Africa, and Cote d'Ivoire is all sea of red. But what else is in the news for East Africa? That's where the big story is for Ali, to give us a sense of the Kenya fuel prices increasing overnight to about 257.8 Kenyan shillings. The Kenya-US trade talk is still ongoing. What does the private sector want? And why do 5 directors at Power and Light Company resigning from the board? Meantime, MTN in Uganda, the authorities are asking this telco to list at least 20% of its shares on the exchange in order to renew its 12 years operating license. Ali, hit the ground running.
So let me first start with some news I just saw flash across my screen. S&P Global Ratings have revised Kenya's outlook to negative from stable, citing that the coronavirus pandemic will slow GDP growth significantly in 2020, saying although external financial support, including from the IMF, will help fund Kenya's twin fiscal and external deficits in 2020, external debt will rise sharply in 2020 and remain high through 2020, 2023. So I think from my perspective, this was expected. I think this will not be a unique phenomenon for Kenya. It will be Africa-wide. And I think we're going to see a sequence of downgrades happen over the next few months. But obviously, this is a shot across our bows for sure. We'll keep an eye on the Eurobond market in particular to see how that reacts to this news out of S&P. Fuel prices, what's good for you guys in Nigeria is not good for us consumers here in Kenya. Obviously, fuel consumption has gone down actually because more people aren't on the roads as much as they would be in a normal year. But bear in mind that in Kenya, more than 50% of the pump price is actually government taxes. So the sensitivity of the fuel price is diluted because of the fixed tax component on each liter that's sold. This is something a lot of people here are very unhappy about, and tend to grumble about the fact that although that's a dramatic move we're seeing here, but typically the moves are diluted because of that tax component. US-Kenya FTA, this is of course this negotiation that's going on between Robert Lighthizer, who's the White House's trade head honcho, and Betty Minor, who's our PS for trade. This is the free trade agreement that Kenya is keen to sign. Even Ivanka Trump was tweeting about it, I saw a couple of days ago. Some folks, some of our neighbors are not happy, and the Africa Free Trade Agreement folks aren't happy either. But Kenya's plowing ahead on this and looking to, be in the front when it comes to Trump's White House. A lot of people are excited about the agricultural side. Kenya, of course, is a big agricultural economy. Things like avocados, we have the best and tastiest avocados, and we know how much the Americans like avocados, but there's a big market for us there. Flowers as well, we're a big exporter of flowers, but also concerns that we'll get, chicken legs dumped on us because the Americans don't like chicken legs, as you know, and that's one of the big arguments with South Africa, that they were dumping chicken legs there, and the South Africans weren't happy. So, it's a two-way story, but we are aware we think it's a big opportunity for Kenya, obviously, to tap into the North American market. Kenya Power, this is very interesting. Kenya Power is our main retail-facing entity. So if you have power, you would be paying Kenya Power. It's had 5 years of declining profits, if they've delivered any profits. A lot of unhappiness. They've been talking about a force majeure regarding agreements that they've signed with KenGen, which is our main power generator. This is quite a political scenario. These were lots of allies of the deputy president. As you probably are aware, we have this political situation here where the president and the deputy have fallen out to some degree, and this, I think, is a consequence of that falling out. SEC Uganda keen for MTN to list 20% of its shares within 2 years. This story keeps coming back and forth. The Ugandans want to reinvigorate their stock market. Of course, something like MTN would really reinvigorate it, and we'll have to see how that develops. Final point is Ethiopia's internet was turned on yesterday for the country, and we've had a lot of content come out of there. From what I can see, there was a Mail and Guardian video. I mean, there's been some serious damage, obviously, in that blackout period, and the question is, how is Ethiopia going to get back to equilibrium after so much damage on the streets, buildings burnt, 239 official deaths, people saying much more. So we've got to keep an eye on that as well.
Yeah, interesting Ethiopian story, the Nile Dam, and all of that remain everyone's guess. But thank you, Ali. Let me ask Ayodeji, but what his thoughts are around the Nigeria's financial market space. It's a very big day when you talk about a week when you talk about expectations next week for a bond auction. But we're looking at the DMO's treasury bonds today. That's one story. Nigeria's June inflation data is expected from the Statistics Office. The PMS price watch is also there. The central bank issued some new guidelines or rules on banks' loan defaulters. And of course, the Ghanaian short-term treasury yields decline on liquidity. These are some of the stories, but let's stick with the Nigeria story here. Ayodeji.
Okay.
Where are we at the fixed income space?
Yes, I think on the back of very high liquidity maturity that we're expecting this week, that's between today and tomorrow, we feel that there will continue to be significant subscription at the primary market auction. So you're seeing, even based on last auction, the 364 days was almost approaching 3%. So we believe that for fund managers, PFAs that have limited investment options will still continue to prefer to invest in these instruments. Next week, there will be bond auction, but we're also, this week there was also coupon payment. Yeah, so the system is really awash with liquidity, and we believe that there will continue to be interest, though we are expecting that corporates, this is the time for some of them to come up with offers, either short-term, which is commercial paper, or long-term for bonds, for them to restructure their balance sheets. Beyond that, also speaking on the inflation expectation, which we expect that will be published before the end of this week, we feel that it will also inch higher. We're looking around 12.85, 12.9. And our reasons are we should begin to see that impact. Core inflation is expected to impact more. We should begin to see that impact on the headline inflation as a result of the devaluation or depreciation at the parallel market. Because most of the transactions currently are being done at that segment of the FX market. The CBN has not started intervening significantly intervening at all at the investors and exporters window. So most business owners have to use other sources to fund, and we may begin to see that impact. We should begin to see that impact in prices. And for food inflation too, this is still the planting season, so we expect that that will also inch up. And based on our storage system. There's really nothing. Most of what we harvest also we are unable to preserve, and as a result of that, there's always that price fluctuation that you see when during harvesting season as well as planting season. So I think the other story that I would also want to wrap up more on, you spoke about we spoke about the revenue of the government, or oil revenue of the government. I know it's been overflowed, but our continuous dependence on oil revenue would continue to, like, you are living your life outside your control. It's an exogenous variable that will continue to impact on your revenue. So no matter our projection, no matter our forecast, everything is being tied to external variable that we don't have control over. So it's really amplifies the risk, because no matter how we try to, as analysts, try to do our projection, this is what the economy should return, should project economic growth in the next 1-2 years. We've seen MTEP, inflation has been projected, growth has been projected. But as long as we don't have control over all these things, because dependent on oil is still very significant.
Interesting, Nigerian story there from you and the market. Ayodeji. Let me ask Chinma Ukadike at Vetivo Capital. What's your thoughts around the June inflation expectations and what do you think it will mean for consumer goods?
Thank you, boss. So, like Ayodeji said, I agree with him. I believe that inflation this month, when data comes out, is going to show an uptick. It's going to continue to be on the rise. For me, most of the pressure will come from food. We expect that. We've already been seeing increased pricing of food, and with limited supply given the season and the constraints to farmers and logistics at this time, we expect that most of the pressure for inflation would come from food. Added to this is the devaluation of the currency that we saw, that we've seen for a while now. So we know that when this happens, we usually see a corresponding increase in prices. So mostly from imports, and then even for foods that don't get imported, people just try to add their premiums to it so that they can still manage their float in the economy. So although it happened in July, we'll be seeing the after effects from the first devaluation we saw, and then going forward into the rest of the year, we'll continue to see this affect prices of goods and services in the economy. So our main pressure point for inflation would really be for food. Also for cost of transportation and fueling, we know that the PMS price was recently reversed back to 150 after we saw depressed levels around 120 in the previous months. So we expect that to affect transportation. Already there are complaints of really increased transportation fares. So we see that affecting businesses that are allowed to open, and we see that affecting production levels and all. So on how it impacts consumers, we believe that with the inflation levels inching higher and higher and higher, we will continue to see disposable income of consumers depressed, and this will affect spending in the economy. So what we believe we'll see is that added to the depressed income levels, as people continue to lose their jobs and maybe go down to lower levels of income, add that to the effect of inflation on their disposable income and the effect of the devalued currency on their disposable income, we expect that we'll really see a sigh for consumer goods companies. We expect that for many of these companies, we expect to see down tiering in demand from their customers as people move to a lower income level. So really, because of this, the outlook is really not promising at all for the consumer goods companies.
inflation, and what happens to the COVID-19 agriculture outlook, logistics, fuel prices, all of this put together is a perfect storm for inflation and what will happen to the balance sheet of consumer goods, especially the big names. As you rightly put it, Chima, as consumers begin to look for products outside the big stores and shops and begin to go down and look for bargain prices for alternative products and goods that they can get at cheaper level. And folks just believe, if I can get by with it, it's okay with me. I can afford to have a little bit less of the higher quality. So quality and demand, when your pocket is pressured, folks begin to look for alternatives. Let's spend 1 or 2 minutes with Ali to squeeze 1 or 2 minutes into the Southern African market story. The GSE yesterday was negative, but the mining production declined nearly 30% year on year in May. Zimbabwe inflation rockets to 77.26%. Meantime, Zimbabwe's ruling party says they want Old Mutual out of work exchange and out of the country's financial system. Let's talk mainly today about Zimbabwe. Inflation 737, Ali. This is not Marx 737, or is it?
So, you will recall in 2008 when we had mathematically extraordinary inflation rates of something in the billions of percent. Actually, month on month, the inflation rate is down by 10 percentage points. But I mean, 737.26% is a startling number for anybody. It is a monetary experiment of a nature you wouldn't wish on any African country. It's extremely unfortunate. The stock market is closed. Salaries, for example, for teachers have dropped from $400 a month to 40 with the devaluation. It's really a very, very extraordinary scenario. Stock market is closed. The largest listed company is Old Mutual. And that obviously is they're asking for clarity from the government about how to proceed. So we've got a very difficult situation in Zimbabwe, and I don't see anything out of the government that gives me confidence they're going to be able to thread this needle. I think they're reacting. I think it's beyond their ability now, and it's rather alarming. And the moment you close down your stock market, you've thrown in the towel. You've lost the fight. You're a boxer who's thrown in the towel. So let's see what happens next. I think it's very difficult to forecast, but it does depend on some external support. And at the moment, externally, I don't think any of the multilaterals or countries are prepared to support the situation. So very complex, very difficult. And I extend all my sympathy to the citizens of Zimbabwe, because nobody would like to find themselves in that situation. Briefly, South Africa mining production down 9.8%. We're seeing this problem across the world at the moment, where a lot of mining production seems to be under pressure. Copper price has rallied into a bull market primarily because of issues with mines in Chile. So I think we'll continue to see quite a benign environment for prices, because people will be uncertain. You can imagine deep down a mine, that's a petri dish for coronavirus to spread. And we've already seen cases of that. And if I can finally touch on your story about TFG, TFG is the owner of Foschini. This is a South African, predominantly female retail network. And what they're saying, they want to strengthen their balance sheet. They've got a lot of debt, so they're doing a rights issue. And I think that's interesting, because I heard a very funny story from a friend of mine who said, Alika, we're all on Zoom, and we don't really have to worry about what's below what people can see. And therefore, the actual purchase of clothes has dramatically fallen off, according to what this friend of mine was telling me. And that informs us of that, I think, that, as more and more of us are stuck at home and dealing with the situation and from quarantine, the business has actually gone down. And I think this is a defensive measure to shore up the balance sheet because of lower sales.
The South African Zimbabwe story is a very interesting one. Let me take a minute or so from Ayodeji, just about 1 minute from him, and Chima about the central bank issuing some the new guidelines on loan defaulters, bank loan defaulters. Ayodeji, what's your take on that guidance or guideline released yesterday?
Yes, I think it's for individuals, because currently what we have is for the individuals. It's positive for the sector because it would also caution a lot of serial defaulters. So CBN have also tried to balance both views. So if you are wrongly accused and your account is wrongly debited, the bank will compensate you. So all due process will be followed before any step will be taken. And also, if it's not resolved and you are taken to court, the fine is also, the reward is also, or compensation rather, is also higher. So I believe that we need a more credible credit system. So with this, for individuals that have been going from one bank to the other, not disclosing what they have, with the BVN, they can easily trace. And if you are owing, at least you can either agree on a structure of how to make this repayment, or your current, you can't be living fine while you are also owing at the detriment of the banks. So I feel this is also positive. But I would also like to add in 20 seconds that we also need to work on the credit system. So for those that have not been defaulting, based on their credit scoring, they should be able to get lower interest rates. That would be an incentive for people not to even default. So if I know that my scoring is between 1 to 10, it's 8, and my interest rate will be 16. Once I build it to 9, my interest rate would be 14%. Then I want to begin to build a credit scoring for myself as I begin to take advantage of that option.
Okay, I like that. I think that goes to the central bank to think about how that can be worked out within the system and with the bankers committee. At Vetiver Capital, what's your on the market this week?
I didn't hear the whole of what you said, but I think you're asking for the outlook for the market for this week. Okay. Since the beginning of this week, we've seen a decline in the ESI. So from yesterday, the ESI was about 44 bips. Sorry, on Monday, it lost about 44 bips. Yesterday, about 36 bips. And we've seen that one common factor has been the banking sector. Also, we've seen some slight gains here and there. On Monday was Boa Cement that tried to help lift the index. Yesterday was Unilever that gained about almost 10% that tried to help the index, although we still saw that it was still depressed. So for going forward, we still think that some banking names are still fundamentally sound, and we still see some value in them, and we believe that investors will see the same. Also, as we see that for the first 2 sessions of the week, we've seen that some of the banking sector names have lost some value. We expect that we'll see bargain hunting on those stocks. So, for example, we see GT, Zenith probably rising in the later part of the week as we expect investors to take their pick on them. So yet to date, we see that the consumer goods sector has lost significantly, about 30%. Like we have said, the outlook for the sector isn't very promising given all the fundamental challenges in that sector. So we don't expect to see anything really changing there in that space. We just expect that, like we said, the banking sector, if we see a positive end to the week, it will be from the banking sector.
I like the banks all the time. Banks have a lot of money. Ali, in North Africa, very quickly, let's begin to wrap up, just about a minute to touch on the Northern African markets. The AFDB yesterday released North African Economic Outlook report. Egypt's Commercial International Bank's half-year profit, first half of the year, went down 6.6%. Morocco's economy is expected to shrink 5.8% in 2020, and Algeria becomes a member of the European Bank for Reconstruction and Development. Ali, which of these countries are you pitching in to wrap up the show for us?
So let me finish with your two stories. Morocco's economy to shrink 5.8%. This is the sensitivity of Morocco to the tourism market. They in South Africa are actually, and Egypt, are the three most, and maybe Tunisia, but most exposed to the tourism. Of course, we have these island countries like Seychelles, Madagascar, and so forth, but these are big players. And essentially, you know, this post-COVID economy means that's taking a very, very big hit. We spoke about Tunisia, first half's 51% down in terms of earnings. So I think that's more a function of the tourism issue for the Moroccan economy. And what's interesting about that Algerian story, EBRD, of course, stands for the European Bank of Reconstruction and Development. Algeria always plow their own furrow. They don't go to the IMF when everyone's going there. They don't want to go to the World Bank. And I think it's politically and geopolitically interesting that they chose to become a member of the EBRD. The EBRD, Abbas, had been talking about making a more of an influence in Africa. Obviously, Algeria are a leader in reaching out to that institution, which was brought together for the reconstruction of Eastern Europe, and now Algeria has found itself a part of that story.
Interesting how this work out. Yesterday, Tunisia also begged 4 of its creditor nations to suspend debt repayments. I'm sure the impact of COVID-19 is getting on everyone's skin. Meantime, I'm sure Algeria is looking at, look, I don't want to go to Washington, I'd rather go to Brussels. So most likely it's going to get a whole lot more comfortable again, because if you look at trade, tourism, and the kind of very long-standing relationship that Algeria has had with Europe, in particular with Spain, Italy, France, and other countries within that within the European Union. Thank you so much, Ayode Jebo, for coming on the show today. Ali Kansaju in Nairobi, thank you so much for coming through. And Chima Okadike at Vetiba Capital, Consumer Goods Analyst. Thank you, everyone. See you again tomorrow, and have a great day.